More uncertainty and volatility going forward for the hog market. The USDA's March Hogs and Pig Report pegs the March 1st inventory of all hogs and pigs at 77.6 million head, a record for this quarter and up 4% from a year ago compared to pre-report expectations of just 3.5% higher. Although the number is down 1% from last December, it generally continues the trend of industry expansion that's been going on since mid-2014. The higher than expected total inventory primarily reflects a market hog inventory 4.3% higher than a year ago compared to expectations of just 3.7% higher, whereas the breeding herd is up not even 0.5% and is actually 1% lower than pre-report expectations and may also be an early sign of expansion slowing. The number of pigs weighing less than 180 pounds was nearly 6.5% larger than the inventory a year ago, and these will be the market hogs arriving at processing plants from April to August. The change reflects that the December to February pig crop was a new record for the period, up nearly 5% from 2019, with almost 2% more sows farrowed during the period. This larger pig crop should imply a similarly larger slaughter this summer. The larger pig crop also reflects a new record of 11 pigs saved per litter on average for the December to February period, compared to 10.7 pigs per litter last year. The 2019 annual average was 10.98 pigs a litter compared to 10.68 in 2018, continuing the upward trend with an average annual rate of increase of 1.3% over the last decade. Along with the smaller than expected breeding herd, farrowing intentions for the spring and summer are down 0.5% and over 4% from last year, which suggests producers are responding to currently lower prices and the possibility that COVID-19 may continue to constrain domestic and global demand. Still, these farrowing intentions combined with a continuation of the upward trend in pigs per litter likely indicate continued growth in the supply of hogs and pork for much of 2020, with perhaps some pullback toward the end of the year into 2021. The small surprises in the hogs and pig report on their own are not as impactful as the COVID-19 situation has been and may continue to be for a while. As the U.S. and world economies slow, cold storage is starting to build. According to last week's USDA cold storage report, there's plenty of meat to go around. Although stocks of poultry are 4% lower than a year ago, stocks of red meat are up 5%, with several pork cuts, including loins and picnics, up more than 25%, and bellies in particular at 38% above year-ago levels. Accordingly, prices for bellies last week were nearly 50 cents a pound, the lowest they've been since 2008, while on a brighter note, loins exceeded $1 a pound for the first time since 2015. Cold storage may continue to build until a peak infection level is reached and surpassed in the U.S. If Easter celebrations are curbed by coronavirus concerns, so too may be purchases of ham, a common main course for Easter dinners. While the Restaurant Performance Index report coming out later this week will likely be negative, grocery demand has surged as people stock up to remain healthy at home. Yet it's questionable whether that level of grocery demand will hold in the near term. A record 3.28 million Americans filed for unemployment last week, suggesting that this Friday's jobs report will almost certainly be negative as well. With much of this in mind, the USDA has revised downward its forecast of U.S. annual pork consumption by 1 pound to 51.6 pounds per person in 2020 after reaching 52.3 pounds in 2019, or the highest it's been since it was 54.2 pounds in 1998. However, U.S. pork exports are still expected to exceed year-ago levels. The U.S. exported almost 663 million pounds in January, about 39% ahead of that point last year, almost entirely due to large exports of 203 million pounds to China, or about 7 times more than last January, and 156 million pounds to Mexico, the most since May 2018, when Mexico accelerated imports of U.S. pork in anticipation of retaliatory tariffs later that year. China's cancellation of 45,222 metric tons of pork shipments in early March brought concerns, as China had reportedly just peaked in COVID-19 infections in February. Since then, China has purchased much of that pork back. The USDA's weekly export report lists exports to China at just over 23,000 metric tons for the 7 days from March 12th to 19th, the highest for 2020 and about 47% above the weekly average for the earlier part of the year. Based on early statistics, the USDA estimates first quarter U.S. pork exports to be 1.9 billion pounds, or 31% higher than last year, and forecasts pork exports in the last 3 quarters of 2020 respectively to be 16%, 19%, and 25% greater than last year. So with all the uncertainty surrounding the duration and impact of the COVID-19 epidemic, there's still the possibility of profitable prices in 2020, even though first quarter prices on a carcass basis are averaging around cost of production in the low to mid 60s. Forecast presented here is for a national weighted average net price on a carcass basis for all transactions for producer sold barrows and gilts, including negotiated and contract prices. This net price should be more reflective of what producers receive and runs at a premium of more than $2 a hundredweight over the base price on average, so take that into account of comparing to other forecasts. Seasonally, hog prices have jumped about 10 to 12% from the first quarter to the second quarter on average over the last 5 years. In anticipation that COVID-19 concerns persist for another month or so, this forecast errs toward the lower end of that range, with a projected second quarter price around $69.19 a hundredweight. Once the worst of the COVID-19 epidemic is in the rear view and economies recover, hog prices should rebound somewhat. Prices for the third and fourth quarters, respectively, of 2020 are forecast to be around $74.62 a hundredweight and $63.69 a hundredweight, and then dip to $62.31 a hundredweight for the first quarter of 2021. Of course, if the negative impacts of COVID-19 on the economy and pork purchases persist longer, and if continued export demand from China doesn't materialize, then the U.S. hog prices would likely fall short of these projections. For the University of Illinois and Western Illinois University, I'm Jason Franken.